What's going on, everybody? This is Living in Arizona Now, and today we're going to talk about the possibility of an housing crisis or an economic downturn and what you need to know about possibly buying a home in Arizona or moving to Arizona. So that's why we're going to make this video. So if you guys have an opinion about what you think is going to happen with the housing market, drop a comment, let us know. We're going to go into this, talk about interest rates, some of the things going on with stock market, and let's dive in here and take a look at what we see going on in the market. One of the things that we have to pay attention to is interest rates. So interest rates are rising. What this means for your bank account and everything you need to know about the way interest rates affect inflation and also the economy in general. So if you guys are out there, Dr. Corey signing in. What's going on? I see you guys in the comment. Definitely leaving comments, letting us know you guys can hear and see what's going on. That's a good thing. But the interest rates are going up now, which means that less money is going to be loaned out, which means less money being printed, which is going to slow down the economy from the inflation that we've been seeing. But what we're also in store for with that is the beginning of what has become a correction. So there's basically three cycles that you have to look out for. There's corrections, recessions, and then depressions. Right now, we are definitely in a correction. You could see with the stock market here, the stock market continues to slide. Ever since March, we've just been going down, okay? So the market has continued to slide down, down, down. March 2022 was a slow month. April was a slow month, and so was May. And we've seen this in other asset classes as well, where the market prices just keep going down. And this is actually affecting a lot of different the stock market is like a gauge for the overall health of the market. With interest rates going up, some people will call this a healthy correction, meaning this had to happen in order for us to be in a sustainable market growth cycle. But you can see Dow tumbles again as tech wreck continues, tech being the NASDAQ. So the NASDAQ being just basically slaughtered, you could see it was down 4.29%. Dow 1.99, that's more of the commodity. That's more of the things that you use every day you touch, whereas tech is more of the internet, right? So with the tech market being down, NASDAQ, it's kind of taken the whole market with it. That's Facebook, Google, Amazon, all the people who've been buying that were all, it's basically the fear and greed index. Right now, the fear is higher than the greed by a long shot, meaning people are kind of selling out. One of the things that I wanted to talk about, because we always talk about this on this channel, is bubbles. But what is a bubble? What is a market bubble? What is an asset bubble? And that's what I want to touch on right here. So you could see economic bubbles. The term bubble is in economic context. Thanks to the people who already hit the likes. So we're going to dive in here and you're going to walk away from this feeling like you kind of know more about the stages of a bubble, but let's talk about it. So the first stage to a bubble is displacement. Displacement occurs when investors get enamored by a new paradigm, such as an innovative new technology or interest rates that are historically low. We just saw that. New paradigms being the technology and then the historically low interest rates. I mean, I knew people who were getting into interest rates as low as 2.2%. Right now, I think we're around 5.5%, 5 to 5.5%, and it keeps on going up. But that's the displacement. That's typically the beginning of the bubble. Then you have this boom, which we've been seeing for like the last 4 or 5 years, the boom, right? Prices are slowly going up at first, following a displacement, but then momentum. So it's like this, people start jumping in the market. They're like, hey, did you buy Tesla? Did you buy this? Did you buy a house? What are you doing? What are you doing with your life? Did you buy Bitcoin? And that's the boom cycle, which then enters into euphoria. We also saw this. The euphoria is where people throw caution to the wind as asset prices skyrocket. Valuations reach extreme levels. We saw that with the housing market. People are like, oh, the housing market will just keep going up, up, up. Everyone's moving to Phoenix. We keep seeing this. It's called the greater fool theory. It's where everyone just thinks that the market keeps going up, up, up. But what goes up must come down at some point, right? And right now, or in most economic cycles, people think, well, this time is different. That's what we hear a lot of. This time is different. I see you guys making a lot of comments in there. You guys could read these great comments people are making. But would it particularly bad if it did crash? I know it would hurt some people, but it would serve for the greater good in the end, as in the housing prices. I'm going to talk about that very one right there by David. That's a good question. But what happens after euphoria is the profit taking, the big money, the smart money, as they call it. They call it smart money, the hedge funds, the Wall Street types. They sell the top. They're like, well, we're in euphoria. Obviously, that's a sell signal. So sell the top. They take profits. And that's what we've basically been seeing, because the reason prices are going down is because someone with a lot of investment sold. So there's so someone is sitting on mounds of money because they took profits. It doesn't just go down because the price just goes down mysteriously. No, it starts because some big institution starts selling. So there's people out there sitting on mounds of cash because they took profits. And that's kind of where we're at right now. People are taking chips off the table and we're seeing the profit taking. But what happens after this, and this is what we have to look out for, if this is the official bubble pop, is the panic selling. Right now we're seeing in the markets, if you look at the prices of many of the stocks, Facebook, Tesla, even Bitcoin, Ethereum, all these different technology stocks, way down. Gas is up, cost of living's up, markets are down. That's typically a perfect storm for a panic. And so that's what we have right now. People are paying record high prices and markets are crashing and they're not getting the wages. So we're really close to a panic. And if we go into that, we enter into a recession. Now the recession has to have a quick recovery. A quick recovery would be within a 6-month span. If it goes longer than 6 months, you enter into probably more than likely a depression, and a multi-year depression would not be good for people who are stuck buying the top of any market, whether you bought the top of the housing market, you bought the top of the stock market, the cryptocurrency market. And so now you have these alternative assets where you start to think to yourself, well, wasn't I buying gold and Bitcoin because of the crash? So that's when people start having that conversation. Jeff S. says it will never crash. And then Scott Glick says that is correct in terms of why would it crash? Houses are bought cash, and unlike 2008, loans are given out to people who can pay them this time. Yes, that is very true. Unlike 2008, when that was basically, it was a free-for-all. They had like a lot of predatory lending, toxic loans. This time they have housing, the loans that they were giving out came with a lot of scrutiny, and a lot of vetting took place in that. But what people are saying is if people lose their jobs, if they, because that's the big problem. So it might not be because of loan or the housing market that it pops. It could be because of the stock market that pops it. Okay. And there's this conversation about jobs and jobs that actually pay a living wage. So we have to keep an eye on this. But to David's point that he made previously, wouldn't it be good if the market did correct itself or go into a depression? And yes, depressions or recessions are not fun, but a lot of people end up getting very wealthy in that process. Warren Buffett was quoted one time saying that the real money is made when there's blood on the streets. So a lot of really wealthy people, in particular the smart money, the people who took the profits, they're sitting on mounds of cash that they have stowed away for when the market goes real low. They come in and they buy it up really cheap. Blood on the streets being red market. When the market's in the red, that's when they come in and they do it. But the question that we need to be asking ourselves, were we in a tulip mania? This means, were people just basically buying at any price, not really thinking about the possibility that the market could be at peak premium pricing and was ready for a correction? And so Waifu says, best case scenario versus worst case scenario. Best case scenario is the market just kind of slows down, goes down a little bit, and then kind of levels out. So we've peaked and then we kind of level out, and we don't really go too far down. We just kind of we basically find the mesa, as you would say, a mesa being the flat of the mountain. So we get up on top of the plateau or the top of the plain. So we plateau around the prices that we're at now. Worst case scenario, especially for the new people who bought here in the last few years, worst case scenario is we lose half or sometimes 60-70% of the equity in their homes, and the housing and the prices go back to where they were in, say, 2017 or 2016 levels. That would be a real possibility in a real nasty, devastating economic collapse, which would probably be sent downwards by the stock market and then these large companies doing massive layoffs across the board. And that's what we have to watch out for. But it probably wouldn't be a loan crisis like we saw in 2008, where people are who couldn't afford to live in these homes are basically in a position where they have to default on their loans. It would be more of like a layoffs in the general economy. We've already seen some hesitation in the economy with what we saw with the shortages of supplies, and a lot of people did the panic buying, but we have to watch out for this panic selling. This, again, panic. If panic starts setting in, that's when you know the bubble is fully setting in. So you have low prices, sustained low prices of the stock market, continued sell-offs that last more than a month, because we saw something similar to this in March 2020. I don't know if any of you guys remember March 2020, when we had that kind of flash crash, and then the market recovered really quickly. Any of you guys remember? It was around about mid-March, and the market just shot back up, and we finished 2020 strong for no real reason other than the fact that there was stimulus. So Socrates of Athens says it's crashing, and then Hampson says government is at war with we the people. That's, I can't really say that. I wish I wouldn't have read that because now they're going to think that I said that. And I didn't mean to say it other than I was reading it, because YouTube's weird like that. At least you have decent property taxes in Arizona. Dallas, Texas raised more, mine to $10K on a 2,300 square foot home. And then, so I see what you guys are saying. Mr. H says, at least with the mortgage, you know what you're paying with the term of the loan. That's the biggest thing. Well, obviously we don't have APR. We have fixed rates. We don't necessarily have those arms like we have where they're adjustable rates. Although I think they've brought some of those back. But the big thing that's hang on, government. Okay, I see you guys making those comments. We're gonna have to. I can't read them, but you guys can read them in the comments. They're basically saying things that most people would probably agree with. It's just I can't say it here on YouTube because high censorship all across the board, as you guys know. Anyways, if you guys zoom out here, take a look at Arizona. So someone said Arizona is the worst overinflated prices nationally, said the news last week, so we have to crash hard. Yeah, I mean, it's going to correct itself. That's basically what we're looking at. But with the interest rates going up, the stock market kind of sliding down, if this continues for about a month longer, we're really getting close to a correction that's going to see prices for the housing market go down. Good for possible buyers, not good for people who just recently bought. So there's two different camps. It depends on what camp you're in. Are you one of those people who's been waiting on the sidelines for this moment? Or are you one of those people who was like, you know what, I'm just going to step in and see what happens and roll the dice and see where I'm at? So it's kind of one of two different camps depending on where you're at. But thanks to 83 people who smashed the likes. I'd also like to thank everyone who subscribed to my new channel, VirtCam. You guys are helping me grow over there. So I really appreciate all the new subscribers on VirtCam. I did pin a link to the top. And thank you to everyone who subscribes to Island Hopper TV. I also made a recent travel guide for Aruba. I know that, now might not be the best time to talk about travel, but it's a good escape for some people who want to get away from the news and the negativity. So that's why I like these videos about travel, because it gets you away from the negativity. But if you wanted to go to Aruba, there's the beaches. They're wide open, no real restrictions either. So consider that. Anyways, thanks to everyone who watched, and we will see you on the next one. I would say right now we've got a month to basically watch what's going to happen in the market. And we could have already reached the peak premium prices. So that's kind of where we're at right now. I think this might just be the top, but what do I know? I'm not a professional financial advisor.